What's up, YouTube? Welcome to the Credit Plug channel where we talk about how to build credit, how to establish relationships with banks and financial institutions, and most importantly, how to get you access to high limit credit funding. If that's something you like to listen to, then we definitely welcome you to subscribe. Otherwise, you can support our channel if you like, share, or even comment down below. It helps our content get out to a wider audience, and we greatly appreciate the support. As a reminder, don't forget to hit that notification bell to get the latest updates and alerts on all the content and video that we drop here on the Credit Plug channel. So for today's video, I have a special review. Now, this particular review is related to a review we did the other day on the Divvy corporate MasterCard. So Divvy does have a subsidiary or affiliate company called Divvy Homes. Now, Divvy Homes is offering a unique approach to get prospective home buyers into the home of their choice and enable them to be able to purchase that home at a later date. Now, this is the latest example of how fintech companies are, providing creative solutions in order to solve a particular problem. So the problem with getting access to home ownership in a lot of real estate markets is going to be the high price of the real estate. So in areas, big metro areas, New York, LA, even like the Washington, D.C. area, being able to afford a home in that areas, those types of areas are really prohibitive, right? Because for one, if you have to put down, 3, 5, 10, 20% down on a, let's say $500,000 home or $400,000 home, generally you're going to have to come up with a considerable sum of money. Myself, even when I purchased my home, had to come up between the down payment, which, I did 10%, and closing costs. It was, close to $60,000. So, what this particular product is enabling are people who may not have the down payment. So, you haven't accumulated enough money to actually put towards a down payment to the point where you can avoid having to pay the mortgage insurance. Because if you, depending on how much equity you have in the property, you're going to have to pay, a mortgage insurance. So this kind of fits the void in regards to that, right? Not having to put down a huge down payment, or not, having that just already in reserve, as well as consumers who may not be ready for a traditional mortgage, right? So with traditional mortgages, to really maximize or get the lowest interest rate, you're going to have a good credit score, somewhere between 740, 760 and above, right, to get the lowest rates. Because the way it works, for every 20-point decrease, from prime credit, every 20-point decrease in your score is going to be like a quarter percentage point increase in the interest rate that you're paying. And then, at least the way that I went through it, they take your middle FICO score. That's what's going to be used to determine what your interest rate is. And if there's two people, that's applying for the mortgage, they're going to take the lower middle score. So whoever has the lower middle scores of the two borrowers who are applying for the mortgage. But anyways, how this particular Divvy Homes program works, it's the rent to own model. So it's a 3-year lease, right? And so how it works, you would just pre-qualify. The requirements is a 550 FICO score and 6 months of income. So once you go through that process, you'll get pre-approved. Then they'll connect you with a local real estate agent in your market, and then you'll have a price, a budget, so that's how much that you could actually spend. And, you're not actually spending that. You're not getting the loan. Divvy Homes is purchasing the home for you. So at move-in, you have to come up with between 1% to 2% down. And so that's all you have to come out of pocket at that particular moment. And so then, since they're buying the home, right, they're going to rent it out to you. So you're going to live in the home, do everything as if it were your own home, right? But, you just don't own it at that particular time. So as I mentioned, it's a 3-year lease, term. So what they'll do is give you the option to purchase the home at a later date. And there's 2 different prices that they'll give you. Since it's a 3-year lease, they'll give you a price for the first 18 months and then a price for the second 18 months. Now, the first 18 months, obviously you're going to be able to purchase it at a lower fixed price. So they're already going to set the price. And then, if you decide to buy anytime within the second half of that 3-year lease, the second 18 months, then, you're going to have to pay another price. And the way it works, so every month when you're paying your rent payment, about 25% of that is going to go towards into a savings account. And then over time, as you're paying, making those monthly, payments, what that's doing is building up savings. And if at the later point in time you decide to purchase the home, that amount that you accumulate in savings will go to the down payment when you do decide to purchase the home. So they're basically creating a way for you to accumulate the savings that you would need, and then within that time period, hopefully you've raised your credit score to the point where you could actually qualify for a traditional mortgage. And they do have access to credit counselors that will help you, prepare you to get ready to apply for a conventional loan, home loan mortgage. And I think a 3-year time horizon is more than enough time to be able to get yourself in a position to qualify for a traditional mortgage. So overall, like I said, I think this is enabling people who may not be in the position, whether that's from a credit perspective, whether that's from having the down payment, to be able to put them in a house, in a home that they'll eventually have the option to buy. So if after the 3-year lease term that you decide you don't want to purchase the home, then you can cash out your savings, but they're going to deduct a relisting fee. So, having to put that property back on the market. So that's just one thing to keep in mind. And the other exceptions, it can't be used to purchase a condo or a mobile home. So those are the only stipulations. And again, this isn't in every single market. If you go on their website, I'll post a link in the description. They do have certain markets where they are currently offering this particular rent-to-own product. But just kind of my take on it, some of the advantages that, especially if you're not ready to purchase a home, but you might want to lock yourself into, let's say, a certain neighborhood or area, because you might know that, in some years' time, the properties over there are going to appreciate to a certain degree. That's one, benefit. However, in terms of downsides, right? Obviously Divvy Homes is going to be making profit off of the monthly rental payments that you're paying to them, right? And then likely whatever the original home price was, they're going to be selling it to you at a higher price, in 18 months to 3 years. So that's one thing. You're not going to get the principal pay down when you're making those rent payments. You're not going to be able to benefit from that, right? And then also too, just some of the tax benefits, right? Being able to write off the mortgage interest and things like that. So I would say if you can become mortgage ready in a shorter period of time, then you might want to just focus on fixing your credit, and then perhaps just going the traditional route, or even maybe an FHA. But this is an interesting product nonetheless. Depends on what your situation is. If you think it may take you a little bit longer to be in a position to purchase a house, then this might be something to consider. Just know that in that 3-year time period, you're not really getting any advantage in terms of asset appreciation, tax benefits, principal pay down, things like that you would get as a homeowner. So yeah, that's all I really wanted to share about this particular product. It's very interesting. If there's anyone who has any experience with the Divvy Homes rent to own product, definitely let me know in the comment section down below. And until next time, y'all take it easy, and we'll talk to you soon. Peace.